the video with other people. Okay, so this is gold. What I'm going to do is I'm going to take you to daily. Okay, I don't know what I'm going to do, but I don't really want to erase the marks that I've had on my chart, because those are what I'll be trading for the next few weeks. What I'll do is I'll just try to make it a little bit clearer for you people to see. Okay, I'll try to make it a little bit clearer for you people to see. So this is gold, right? This is the daily time frame. This is the daily time frame. If you ask me about gold, I'm going to tell you on first side that gold is in a retreat. Okay, I'm going to tell you in first sight that gold is in a retracement. It means gold has made what we call a swing, and then it is retracing. So it's among one of the currency pairs that I am using for the scalping strategy that I am doing. Okay, gold is among one of them. I picked 5 currency pairs, and what I do is that I want to follow them closely. I mean, I trade every currency pair, but I've picked 5. I've picked oil, I've picked gold, I've picked GBP USD, I've picked Euro GBP, and I've also picked what is it? The German index. Okay, I've also picked the DAX 30. Now, when you are scalping, what you want to do is that you want to follow a currency pair on a very tight basis. Okay, you want to follow a currency pair on a very tight basis. Now, and for you to scalp, you must be able to do what we call a multi-time frame analysis. A multi-time frame analysis means that you start from the weekly time frame, you go down to the daily, you go down to the 4 hours, and somebody like me, I scalp on the 45 minutes. Okay, I scalp on the 45 minutes. Now, you start from the weekly because you want to determine the direction of the market. A scalper, what is most important for a scalper, you have 2 things: direction of the market and momentum. You don't want to be a scalper and then you enter a trade when the market is boring. You want to be a scalper and you try to pick that point when the market is going to move, then you get into the market. So gold, I'm going to start from the weekly time frame. What I'm trying to look for in the weekly time frame is 2 things. Okay, 2 things I'm trying to look for in the weekly. I hope you can see clearly. I hope you can see clearly.
Yeah, I can see clearly.
Yes, in the weekly time frame, what I'm trying to do is I'm trying to identify candlestick signals, market structure, and demand and supply zones. Okay, candlestick signals, market structure, demand and supply zones. First one, if I look at candlestick signals, in the weekly time frame, it means this should have been yesterday. I should have been looking at this at the candle that I've closed. You know, we have how many candles here? We have 2 green and 1 red. I should have considered just the 2 green, because the red candle is the current candle for this week. You can't consider it when you're looking at a candlestick pattern because it has not yet closed. Okay, the candle has not yet closed, so you can't consider it when you're looking at candlesticks. So when I go to candlestick patterns, there is no candlestick pattern that can be identified from these 3. Okay, there is no probably reversal or continuation pattern that I can identify from here. Next thing I'm looking at demand zones. I can see clearly that this thing was giving me very long weeks. Okay, if you see the red triangle that I have here, if you see the red triangle that I have here identified as a demand zone, you'll be able to you'll be able to see it better on the daily time frame. Okay, now what I identified on the weekly time frame was a channel. If you know what a channel is, let me just highlight the channel for you. Let me just highlight the channel for you so that you can know what a channel is. A channel, you see what I've highlighted in blue. Okay, that is a channel. It means the market is moving in confined regions. The market is doing up, down in confined regions, and this is what we're going to call a bearish channel or a downward sloping channel. Okay, You see, this market made this move. This market made this move. You had this move up. And now what we are getting is what I'm going to call a retracement. Okay. We are getting a retracement and it can retrace to any of these levels. Now, this is where I'm putting my Fibonacci in play. Please, it's a lot of things. I'm not teaching, I'm analyzing. Okay. There are a lot of things here that you will not understand. I'm not teaching, I'm analyzing. Now, this market made a swing. Okay. Gold has made a swing for the past from we have a swing from May 2019 to the high to this high we had at in September 2019. So as a technical trader, there are already a lot of things that I've identified here. Okay, I've identified the swing. The swing is this long move up. That is what I call the swing. I have identified a channel which indicates to me that the market is probably in a retracement. I have identified a demand and supply zone. Demand, supply. I've identified a demand zone, which means that it has reached a level where it's going to sell off. I've determined a demand zone. So in the weekly, this currency pair is actually telling me that for the current week, this market is going to be moving downwards. Okay, from my swing retracement, from my channel, and from my demand zone. Those are already three things that are telling me that this market will have the tendency to fall this week. So anything that I'm looking to do in gold, I should be looking to sell. Okay, I should be looking to sell gold from the weekly time frame. That is what it tells me in the weekly time frame. I'm trying to do a multi-time frame analysis. Multi-time frame analysis. That means I move from the higher time frame right down to the lower time frame when I'm taking my position. Okay. Next time frame now, I go to the daily. Okay. I go to the daily, and in the daily, what am I looking for? Candlestick pattern, structure, okay, demand and supply zones. First thing I identify, my demand and supply zone that I saw in the weekly, which is here. This demand and supply zone, which is here, I see in the daily that it is very, I see in the daily time frame that it is even clearer. Okay, I see that it is even clearer in the daily time frame, that the demand zone is a little bit clearer in the daily time frame. Okay, next thing, what do I see in the daily time frame? I see this candlestick pattern. This candlestick pattern, the two last green candles. Okay, what are they giving me? It's giving me what we call a bearish shooting star. A bearish shooting star is a candle that indicates that the market is going to go down. Okay, so we have a bearish shooting star at the top of the channel. This is our channel. Yeah, this blue region. Okay, this blue region here, we have a candlestick pattern at the top of that channel, which coincides with the demand and supply zone. So you already have three things that are also indicating to you that this market is going to go down. Weekly channel is showing down. Weekly movement is showing retracement. Demand zone is showing sell-off. Candlestick is showing sell. Okay, you already seen the number of things. You already seen the number of things that are indicating that anything you want to do in gold, you should be selling gold, right? It's already indicating to us that anything we want to do in gold, the best direction for us to go is a sell. Okay, I move down directly now to my 4 hours time frame. Remember, I'm just reinforcing. Now, when I came down to my 4 hours time frame this morning, okay, when I came down in my 4 hours time frame, I already saw this move, this long red candle. Can you see it? The long red candle we have here. Okay, when I came down to my time frame, I already saw this candle. Now, another thing I identified uh, on my 4 hours time frame was a channel. This one, you can see we have a smaller channel here. Okay, let me highlight it. These channels, they are the things that help you to trade breakout. Kenneth, you remember you asked a question about breakouts. Okay, this is an
Yeah.
example. So when I saw this channel, what I was looking for now is I was looking for a breakout. Okay, I was looking for a breakout in this trade. So from the weekly to the daily to the 4 hours, they're indicating to me that this market is going to go down. But I don't just want to enter the trade like a swing trader. If I was a swing trader, I should have just entered this trade here. Let me, if I wanted to swing this trade, okay. If I wanted to swing this trade, I should have just entered the trade here, and then my stop loss normally will be somewhere around here, okay. And my first target is going to be here, and probably my second target is going to be down here. This trade can take me anything from 1 to 2 weeks. Okay, you have seen the way I have tried to trade this trade like a swing trader. Okay, that is the way I've tried to take this trade like a swing trader. It means I'm entering this trade at this level. This will be my stop loss, and this is going to be my take profit one. This is going to be my take profit two. So for this trade, I should be looking at how many pips. I should be looking at 500 pips, okay? And my risk should be 95 pips. So you're risking 95 pips to make 500 pips. Good trade, okay? Now, but I don't want to swing this trade, okay? I don't want to swing this trade. I want to scalp this trade. Okay, I want to scalp this trade. It means I enter the market with a huge volume, and then I hold the trade maybe for 1, 2, 3 hours, and then I leave the trade. So I go now to my 45 minutes. This is where I do my scalping. Okay, so you can see this channel that I identified on the 4 hours time frame. When I had this move, I missed the first move. Okay, I missed that move, but now I had this channel and I was doing up, down, up, down. Now I was looking for something that was going to indicate to me that this market is going to fall. Okay, so as a scalper, these are the two places where I could enter this trade. Okay, these are the two places where I could enter this trade, and there is only one place where my stop loss can be. Okay, there is only one place where my stop loss can be, at the top of the channel. You see, one place. So if I'm scalping this trade, this is what I'm going to be risking. I'm going to be risking 37 pips, and I want to take as much as I can take from the trade, and I move out. Okay, now if I was scalping this trade, I could decide to enter at this bullish engulf, at this bearish engulfing pattern here. You can see this bearish engulfing pattern. I might have entered here, or as a more cautious trader, as a more careful trader, I should have entered when it broke out and then it closed. I should have entered at the close of this candle. So that is it. I'm currently in this trade, and as I'm talking to you people now, I've been in this trade for about 2 hours, and that's the number of pips I've made, 127. Okay, that is the number of pips profit that I'm making. I can even show you my MT4, and you'll see the trade. So I'm currently in that trade. You can see how I've taken time to pick out this trade as a good trade, right? You can see how I have taken time to pick out this trade as a good trade. That is how you do it. As a scalper, you don't want to be looking at 10 currency pairs. No. Okay? You don't want to be looking at 10 currency pairs. You want to be looking at 1, 2, 3, 4, 5 currency pairs on a maximum, and you follow them closely. That means the only thing I'm looking to do in this pair now is I've already protected my profits, and I'm just trailing it. Okay, I'm just trailing the profits now. So that is it for gold. You can see how I started from the weekly to the daily to the 4 hours to the 45 minutes. That is where I pulled the trigger. Okay, it is in the 45 minutes that I pulled the trigger, and that is it. The only difference now between me and a swing trader is that I have to sit in front of the computer and I'm watching. I have to sit and I'm watching second by second, because the key of scalping is you want to enter at the right moment, and if you are wrong, you get out. Okay? You enter at the right moment. If you are wrong, you get out of the trade. It is that simple. You don't want to stay in a scalping trade. Remember the guy who told us he was making 150, then suddenly the market just turned against him. Okay? It means that he was in the wrong direction. He was in the wrong direction. Now, that is gold. Please, if you have any questions, just hold them. We're going to come back to them. Let me come to oil now. I'm also in this oil trade. Okay, I'm also in this oil trade. Let me show you what I've done with oil. If I go down to my daily time frame, you see what I've done here? I've identified zones. These are zones. If I go to the weekly time frame now, let me start from the weekly. Remember, we are doing a multi-time frame analysis, okay? If I start from the weekly, this is it. You have to always, in the weekly time frame, the first thing you're trying to identify is market direction, okay? Market direction. In which phase of the market are you? Are you in a, are you in a, let me mute somebody, please. Are you in a swing? Are you in a swing or you are in a retracement? Okay. Small thing, is very easy to teach trading when it has passed. Okay, it is very easy to teach trading when it has passed. The most challenging thing is to be able to make money from the market. First thing I identify here is this is our swing. Okay, this was our swing, and next thing I want to identify, if that was our swing, was our retracement complete? Our retracement was a perfect one, 61.8. Okay, 61.8. So automatically, I'm expecting I'm expecting this. I'm expecting I'm expecting our market to fall this much. Okay. Remember what we call the ABC pattern. I'm expecting our market to fall this much. Let me just shock you people a bit. That is how much I'm expecting crude oil to fall. Okay. It doesn't mean that it's going to fall directly the way I want it to fall. No. It means that it can do this. It can take even 1 year to reach this level, or it might never reach. Okay. But according to the ABC pattern, you're expecting your move after your swing to be equal to your retracement. But that is just one thing I was coming to look here. Automatically, I realized that we have had a swing retracement. Now our swing is continuing. Next thing I want to look at is, do we have a candlestick pattern? Okay, remember, we are in a weekly, so the only patterns that matter are the candles that were before. Okay, the candles that were before. So I see that we don't have a candlestick pattern or a reversal pattern, but we have a very bullish pattern. That means last week was very bullish for crude oil. It means the market actually went up last week. Next thing I want to identify are my supply and demand zones. Okay, I see a very good one here. This is a supply zone. I see a very good one here. This was a demand zone, and the market is within the two. Okay, now what I want to do is I want to go down to my daily time frame. Daily time frame, what am I trying to see? Candlestick patterns, demand and supply, maybe channel. Okay, now I also managed to identify some zones here. This is a supply zone. This is a demand zone, another demand zone, another. These are what we call minor zones. These are minor zones. If you were taking this big trade, you want to use these other zones like take profit levels, like uh, entry levels to add new positions. So what I did was I identified this channel. Okay, the market has been doing this up down in this channel. So in oil, I know that we are generally supposed to be going down, but we have been moving in swings. So when I realized we're at the top of the channel, which coincided with this minor demand zone, I automatically told myself that what I'll be looking for in this trade is for a sell. Please, 1 minute, let me connect my laptop. Okay. What I should have been looking for is I should be looking for an opportunity to sell oil. Okay, I should be looking for an opportunity to sell oil. Now I zoom down to my 4 hours time frame. I go down to my 4 hours time frame. What do I see? I see that this market has done the up, down, down, up, and it is at the top of our channel, and it has also done a smaller channel. up there. Okay, it has also done a smaller channel up there. This now is able to help me to know when I can take my profit or when I can stay in the trade. So 4 hours, I am in the middle of a demand zone and I am at the top of my channel, which automatically tells me that I'm in a hot zone. What I'm looking for is momentum in one direction, and my preferred direction is down. Okay, my preferred direction is down. So from my 4 hours time frame, I'm looking for downwards momentum to be able to enter this trade. Okay, now our friend who burned his account, I'm sure he entered when he saw these candles going up. Probably he was trading on a lower time frame, let's say 15 minutes. Okay, he was trading on the 15 minutes, and when he saw this, this group of candles going up, he decided to enter the trade. But when he saw this shooting star, he should have left that trade. He should have left that trade at this level. He should have taken his profit when this candle closed. This red candle closed, he should have taken his profit. But remember, somebody like me who is trading on the 45 minutes, I was on my 45 minutes and I saw this thing going up and I felt like, damn, I'm going to miss this trade. Okay, I felt like I was going to miss this trade. But I had information that he did not have. This thing had done down, up, and it did a down. It was coming down, but it turned here and went back up. So at the top of this channel, there were two things I was expecting. Either this market breaks out and I'm looking for an opportunity to join the buyers, or the market breaks down. So when I saw this bearish engulfing pattern, I entered the trade. Okay, so you can see I'm currently in oil 2 and I entered at this candle, and currently I'm about 5 points. Okay, I'm about 51 points up in the positive. So automatically, as a scalper, I have already put my stop loss on break even, so that if any magic is happening, if they are bombing any place in Saudi Arabia, it should not surprise me. Okay, when you are a scalper and the market goes in your favor, the first thing you want to do is you want to protect your account, because you're using very big volumes, and the least mistake you make, it might hurt your account very seriously. So as a scalper, you want to be able to protect your account. So those are two trades. Next trade that I'm looking to enter is Euro GBP. Okay, I'll just take this one directly to the 45 minutes. Okay, this is Euro GBP. Now you see the way I'm mapping out the channels. Okay, you see the way I'm mapping out the channels and the supply zones, and you see that these supply zones are always coinciding with the channels. Euro GBP, I have decided from the weekly time frame that my preferred direction is up. Okay, my preferred direction in Euro GBP is to buy. Now I have identified a channel, and I love my 45 minutes, because anytime I see this week, this rejection at this down bottom of the channel, I know it's an opportunity to enter. Okay, I know it's an opportunity for me to enter the market. Automatically, I know it's an opportunity for me to enter the market. So this market did up, it did down, it did up, and this is a down now. So at the bottom of this channel, I'm looking for something that is going to make me enter. Okay, before calling you people for this class. Okay, are you getting me? My internet is alerting. Okay, before calling you people for this class, look at the candle I saw. Look at this candle I saw. Can you imagine this rejection at this level? This thin candle. Okay, this thin candle, and automatically it happened at a demand zone. Can you see something? So this is what we call confluence in trading. Okay, in trading there is something we call confluence. You're always looking for the maximum number of things that will make you enter a trade. Okay, you're looking for the maximum number of signals that will make you enter a trade, so that when you're entering with all confidence. If you are wrong, then you know you are wrong. Okay, so when I saw this, I automatically knew this was a good entry signal. Okay, and I took the trade. But unfortunately for me, the market was going down. But look at where my stop loss was. Okay, when I took this trade, I put my stop loss beneath the zone, okay? I put my stop loss under the supply zone, because you're only wrong when this market breaks this channel and it breaks the supply zone. Then you know you are wrong, okay? As a trader, you have to be able to accept that you are wrong. And you cannot know that you are wrong unless you have a system that you're following. It's only when you have a system that you're following that you can tell yourself, I am wrong here, I am correct here, I am wrong, or according to my system, I should not be doing this, okay? So when I saw this, I entered this trade here, okay? I entered this trade here. At the close of that candle, I put my stop loss here, and this is where I'm targeting my first take profit, and I'm targeting my second take profit at the top of the channel. So if you look at my risk reward, I am risking 20 pips to do 52 pips, okay? That is a 1 is to almost 1 is to 2.5. I'm risking 20 pips to do 21 pips, and you can see that since I entered this trade, I've been in the negative, but I just looked at my MT4 now, and I am just at -3. Okay, at one time during this class, I was at -38, but now I'm at -3. Remember, even at this, I am scalping and I am risking 15% of my account. That is why I have to be very meticulous. Once you're risking 15% of your account per trade, you have to be very careful. Okay, you have to be very careful the way you're entering trades. You want to enter a trade at a make or a break level. You don't just enter a trade because you have money in your account. You want to enter a trade at a crucial point. So those are examples of 3 trades that I took. I'm also observing the German 30, that's the DAX. You know, I'm observing it very closely. If you look, I have already made my marks. Oh, this was a good cue. This was a good cue for me to enter. If you look, I already made my marks on the DAX. If I go to the daily, okay, you see this. Remember the ABC pattern that I told you, that when a market makes a swing and it does a retracement, it's also going to do that same kind of a swing. So automatically, this is a demand zone. Okay, automatically this market is at a demand zone. That is it. And it has made that move. It has made that move exactly to that zone. Okay, it has made that it took a swing. Okay, probably somebody will argue that I've taken the wrong swing. Probably this should be the swing. Okay, this should be my swing. Okay, you know, that should be my swing. Somebody will argue that, but I don't really think that's perfect because it was in a range. I think I had the right swing, and it came into the 61.8, perfect retracement, gave me a move there, and now it has reached the level where it was supposed to reach. And I go down to my 4 hours, and it is doing something very nice in the 4 hours. The moment in the 4 hours I have a red candle here, I'm already looking to enter. I go down to my 45 minutes, and in my 45 minutes, what it's telling me is that, guy, you should have already been in this trade. Okay, that is what it is telling me. You should already be selling this thing. But this is not a currency. This is an index, and indices are different. You know, they don't move. They move based on the way the companies, the 30 biggest companies in Germany are moving. So you need to be careful. Okay, you need to be careful when you're trading indices. You also you want to give yourself a break, and you go and look at what the companies are doing. They have Siemens, they have Bayer, they have Deutsche Bank. You want to look at what all those companies are doing before you enter the market. So that is it. That is just a brief analysis of what you can do. You know, you can have a system. You start from the longer time frame to the lower time frame. So please, I might not teach you demand and supply, but you want to go and read on demand and supply, you go to www.tradecity. Okay, it's some two guys that are really good. I think I like them. www.tradecity, www.tradecity.com. You want to check them out. Okay, you want to check them out. they teach demand and supply very well. Let me try to get there. Tradecity.com, they really teach demand and supply on their website very well. Okay, tradecity.com. You want to go there and you want to have a look at what they have on demand and supply, and you also want to read. Generally, you just want to read on demand and supply and see what you have. Do I have a connection issue? Okay, so that's the German DAX. That's the German DAX. I think it's one that I'm going to take. Okay, so please, I'll just take a few questions. If you have anything that you haven't understood or anything that I can explain to you more, you can just ask. Just unmute yourself and you ask if you have a question. If not, I'm going to share the recording. I'm going to share the recording with you people on the group so that those who did not have the opportunity to join, they can join and see some of the great stuff we are teaching our people on the course. I mean, it's a course. We don't really want to force it on people, but we are teaching the raw, pure technical analysis. We are concentrating on technical analysis. We are concentrating on your tools. So that is it. That is how I do my analysis. That is how I scalp. Some of these trades, I'll just take them and forget them. But, when I'm scalping, you have to be sure that you're entering at the point where you have to enter. You're entering the point of being wrong or being right. Okay, that is it. Yes, Kenneth?
Okay, like if you're a swing trader and you want to enter in a 4-hour time frame, you start analyzing your market from the weekly time frame to the daily time frame, then you finally enter in the 4
At the
hour
4
time
hours, yes. I think it really helps. Okay, it really helps when you learn how to understand what we call multi-time frame analysis. Okay, because the market can be going down in the 4 hours time frame. Meanwhile, it's just a retracement. Okay, the market can be going down in the 4 hours time frame. Meanwhile, it's just a retracement. But if you had the time to look at your weekly and your daily, you were supposed to know that the main move of the market is going up. Okay, if you had the time to look at the weekly and the daily, you were supposed to know that the main move is going up. So if you see the market going down on the 4 hours, what you should be looking for is to catch it at the next supply zone. Okay, what you should be looking at is to let it do its retracement and then you enter when it's going up. There are two things. A market swing is always faster than a retracement. A retracement is always going to take longer time. So you might enter in a retracement and you begin to waste your time there and you're making little money and you're blocking your capital. So what you want to do is you want to know the direction that the market is going, and then you want to go to the time frame that your strategy tells you, and you want to enter the market at the right point. You want to enter the market at the right position. Okay, so that is it. That is it. I think on the 4 hours, there's something I'm going to show you. The next time you come to the office, I'm going to show you something that you can use to enter your trades on the 4 hours.
Okay, boss.
Okay, any other question?
And one more thing. Do you plot your demand and supply level from the weekly time frame then to the daily?
Yeah, you want to identify weekly demand and supply levels are completely different from the daily demand and supply levels. Okay, now
so you plot on both.
Pardon? Yeah, you draw it
You
on
plot
both.
on.
You plot it on both because the daily demand and supplies will always match with the 4 hours and the lower time frames. Yes, the daily is always going to match with the 4 hours and the lower time frame. So you want to plot it on the weekly and on the daily.
Okay, boss.
Yes,
Thank
you want
you.
to plot it on the weekly and on the daily. So please, it really helps to learn about demand and supply. There's somebody in the group. His name is Vega. He's very good demand and supply trader. So I'm also going to look for time and see if he can come into one of these our sessions and help us understand how to identify demand and supply zones.
Okay, boss.
Okay.
Thank you.
Okay. Any more questions? Okay, that's great. So you guys have a great evening. and I just thought that I was free, and it was an opportunity for me to share something like that with you guys. Okay, take care,
Thank
everyone.
you.
Okay,
Thank you.
yeah,
Take care.
I'm going to share the recording for those who want to go over it again.
Okay.
Boss, Sita will just appear.
I've done things. I've done my video.
Yes, I realize. Okay, nice day.
Okay.